Welcome to the Crypto Podcast. You can find all our episodes on thecryptopodcast.org. You find everything about me. Scan the QR code or go to roycollin.com where you find my 6 podcasts. If you're looking to start a podcast, you're an existing podcaster and you want to improve your game, I help with that. I help people go on podcast tours. And I've also just launched a school group for those in the podcasting at SKOOL.com/PodFather. If you're looking for virtual assistants, go to va.world. My guest was disillusioned by what he saw as a rigged system. He left investment banking to build in decentralized finance. As a NASDAQ contributor, he has developed investment frameworks that blend traditional portfolio principles with cutting-edge financial technology. His vision is finance that is fair and accessible to all. Together with his co-founder Salem, he has led Decentralized Masters, a multi-million-dollar remote finance company employing 85 people across 27 countries. Their aim is simple and ambitious: improve global financial well-being, guided by a 25-year plan for sustainable growth. Please welcome Tan Gera.
Hi, everyone. Thanks for your warm welcome, Roy.
Yeah, no problem.
For the intro.
Yeah. I suppose before we kind of get into what you're doing, I'd like people to kind of learn a bit more about yourself, first kind of upbringing, how you got into investment banking and in the transition.
All right, cool. So I'm Tan Gera, as you said, founder of Decentralized Masters now, but ex-investment banker, right? I worked on Wall Street for a while, and I'm also a CFA charterholder. For those who know what the CFA program is, it's often considered as the gold standard in investment analysis, right? So, you know, protecting and growing your wealth in today's financial system, it's almost risky, right? Because it's a trust-dependent game. Who am I going to trust to manage my own funds? And many, I would say, successful people, entrepreneurs, even high net worth individuals, or those who are working a corporate job very hard, they learn everything about their own field, but it's a bit difficult to understand how to grow their capital. But it's important, right? It's very important to reach financial freedom. And in the meanwhile, they're hearing the news that there's inflation, that dollar is getting devalued, their freedom might be restricted, you know, if there's a central bank digital currency and all these things. So my goal when I left investment banking was to help these kind of investors achieve financial sovereignty, not just freedom, but also control over their financial assets, by educating them, because there's not enough financial education, I feel. And I literally saw behind the curtains of how those big Wall Street banks or, you know, the financial industry is run. And let's just say that I couldn't see myself staying there for 40, 50 years. So yes, I had a golden path in the investment banking career, but it didn't sit right with me. I thought there is much better that I can do and contribute to the society. So yeah, fast forward to today, you said 85. We're actually 130 now in the team. Yeah, it's grown quite a bit in 3 years. And the reason is there is a lot of demand. People understand they need to get educated. They're just looking for a trusted education partner, I would say, right? I always take that analogy, but basically when I was in my early 20s, I decided to do something extra. I was in a business school. I was studying finance, but I decided to do something extra. I decided to take the almighty CFA program. So I bought like these many books, and it's like 3 levels you need to pass, and it's like 900 hours of study combined. Thousands of complex math formulas that you need to learn how to apply. And I was broke. I was a broke student, okay? And it cost like 3,000 euros back then, which for me was a lot. It was almost everything I had to my name. I still decided to do it because I wanted the challenge, and I understood that investing in myself and that financial education would open the doors to better jobs for me, which happened. That's how I ended up on Wall Street. But not only that, I actually went and got an extra mentor, someone who had passed the CFA program with great grades, because I didn't just want to pass it. I wanted to pass all 3 levels young, which I did at 23 years of age. But I also wanted to do it in less than 900 hours because I was like, there must be a way, to study efficiently. And getting that mentorship actually allowed me to not only cut my study time from 900 to 300 hours, so 1/3, I actually also ranked in the 90th percentile. So it's global, right? For level 1 and level 2. So that opened me even more doors. So all of this to say this, right? Those who invest in their financial education and seek more usually get the rewards. And that's exactly what we've built at Decentralized Masters. And it's exactly what we're seeing with our members. It's not the smartest. It's not the most educated that win. It's those who invest in themselves and actually, go deeper, get the mentorship, ask questions that get massive, wins behind it. So it's working.
Very good. And what's your crypto journey then?
So I started in late 2016. Basically I was working initially with some random traders, and then I ended up in my first job as a hedge fund analyst. Okay, I was assisting portfolio managers in a hedge fund. So we're working on equities only, right? It was my very first entry into the financial market world. And some of the traders there, or the analysts, they were dabbling into crypto and just trading it for fun, saying, hey, it's a complete scam, but let's just, play there. It's a new little, gambling addiction, let's say. That's how I started. But then it started getting very interesting. Fast forward, okay, I actually made 7 figures in the first 2017 run, and then I lost it all when the market crashed. Great, actually, that it happened to me, because it taught me more lessons than any realized profit could have. So that's my initial entry into the market. But I think the main difference is most people would have left, discussed. I didn't. And there's a very particular reason why I didn't. Is because 6 months later, I was maybe less interested, let's say, but less engaged. But still, I still had some funds sitting there. I was still watching the charts, etc. But I didn't have the conviction level yet. And what happened is, then I was working in M&A. I moved from hedge fund, financial markets, to actually corporate finance and doing merger acquisitions. I was just trying to see what I like more. And after working for full 5 months on an investment banking deal, like corporate deal, we actually reached the final phase, and there's a signing appointment that is happening with all the bankers, the buyer, the seller. It's a $10 million deal, German company buying a French one. I was involved, did all the work, etc. for 4 or 5 months, spent hours, nights working on the project. We get to this deal signing, and they say, okay, it's signed, $10 million, the purchase price. Let's send the wire. They call the banker at Deutsche Bank, and they say, okay, you can release the $10 million wire. They hang up the phone and they say, all right, it's done. Congratulations. I'm like, okay, nothing really happened here. So I asked my boss, hey, so how long is the wire going to take to hit the account of the seller? And he says, oh, 2-3 days. I'm like, oh, so who's going to own the company for 2-3 days? Because money is in the air, right? So then he explained to me, the buyer gets it. It's okay. Then I'm like, oh, okay. And how much money did Deutsche Bank make from sending that wire? Do you know? And he's like, oh, something around like 50,000. I'm like, wow. So for a $10 million wire, they paid $50,000 flat just in fees. He's like, yeah. Okay. I found that, weird, and no one even questions that. I go back to my desk that same day, and I send 10K in Bitcoin to a friend of mine. And I just, it's in front of me. I see, wait, this took seconds and it took pennies, right? The network wasn't congested back then. And so then I went to a simulator, and I simulated a $10 million transfer in Bitcoin. Okay. What do you think? What did it tell me? How long and for what fees would that have been done the same day?
Probably similar.
Right. So literally $2-3, I think, and maybe seconds, tens of seconds to settle. And then I had my eyes wide open, and it hit me. And I'm like, I have the proof. It's tangible, finally. And from that day, I didn't look back because my conviction was completely built. And I tried to convince other people, they would just never listen. Okay. Actually, they would make fun of me. In the traditional finance industry, the other bankers would tell me, hey, just, stop it with your crypto thing. It's a scam. And I'm like, but guys, like, the technology is far superior. Like, it's just undeniable. They're like, you don't know what you're talking about. They would never let that happen. The gambling thing, treat it as such. But for me, it changed everything. And suddenly I realized Western Union, all these kind of companies, they're gone. They have to die. Then I realized the Swift, the fact that you can't send a wire over the weekend. I mean, how more efficient would the financial system be if there was no banking hours? It's 24/7. And if the market doesn't close on the weekend, I mean, that in itself would make the market better, much better, period. That in itself. Then the fees and the speed. So I'm like, okay, this is going to happen no matter what. And then I start joining conferences and I start learning more and building up my portfolio again, but this time with conviction.
I done a lot. I'm Irish living in Poland, and I've done a lot of real estate. At the start, I was selling a lot of properties and putting syndicates together. And I saw at an early stage, they were charging 5%. Like when you're sending $1 million or whatever, it was like, what's going on here? So then I set up a company with another guy doing exchange, crypto exchange, or not crypto exchange, currency exchange. And we were doing it with Deutsche. We got it at 0.1, and I was charging people like 1% instead of 5. Or if it was like, 50 grand or less, I was charging 2%. But what happened, it was we done well for a while, but what happened, people would go to their bank and they go, oh, we're getting it for this. And straight away, the bank then would drop it. And even in Poland, I saw that there was people, if they were going from Polish zloty to dollar, they would tell them, oh, you have to go to euro as well. And they were charging them 10%, and people were paying it. And like, most people don't even think of this. I was looking at a video with yourself and your partner, and, just talking about Western Union. And I don't think people realize the amount of money that they take. So you might just touch on, it's like PayPal is all these different things. They're pet peeve for me, but Western Union, you might just touch on that one, because a lot of people think, you send $100. And the problem is, when you're sending small money, it means that you don't have that much to send, and you're sending it to maybe a family member or something like that. And they're just rubbing their hands all the way.
This is a massive market, right? Like all the immigration that went to Western countries like the US or Europe or even Canada, I mean, Australia, you name it, right? And I'm from Indian descent, and my parents are immigrants, so they used Western Union extensively. I still remember sitting in the car almost every other week, waiting in front of Western Union so that my mom or my dad gets done. So to me, it was like very tangible, right? And always they would come home and complain, oh, I sent 500, they got only 380. I'm like, what? It's insane. They already make nothing in our, spectrum. And they get charged like maybe something ridiculous, like 15, 20%. What an amazing business they've had, but thank you, but it's over, right? And it's long overdue, let's say.
With
But yeah, still amazes me.
with PayPal, because a lot of people still use that, and it's the same thing. I mean, I've touched on it before, but basically, you're only allowed, like, if I use Revolut or Wise or whatever, money comes in and I get a fantastic rate. But with PayPal, I'm only allowed to pick a certain currency. So if I have it on dollar and someone sends it in euro, straight away, there's times they're taking up to 10%, and their spread is about 3.6% or something. And most people don't even realize it. I don't know how they're getting away with that, because they have a massive amount of customers.
So for PayPal, I believe their secret weapon has been the fact that they insure, the transfer, and they protect the buyers. So, I mean, if you don't know the person who you're sending to, even if I still believe it's way more, it's too much, and with smart contracts, it's going to be resolved. Still, I believe. I mean, there's a value proposition that almost I would understand, but if you're sending to someone that you know, then it's pure.
Exactly. If they had a button saying, do you want to insure it or not? And then they just say, take 0.1% or something like that. Even if it was 1, it's painful, but you don't have that option.
But now you would notice that all these businesses like PayPal, like Stripe, they're all going the stablecoin route because they know otherwise they're going to die. So it's happening.
And because, like, I heard your story that at the start there was a lot of like with Stripe. I remember a client had paid me and it took it off her card, and it's like, I'm waiting. I think it took a month before it arrived to me, and it's like, it's strange. But I've heard of a lot of people similar to you, they kind of block them and send the money back. So you might just touch on Stripe and what's your thoughts on them now? Have they changed things?
I have a little bit of PTSD with Stripe, if I tell you honestly. So, okay. I don't know if you have watched, now that we're on podcast, it's cool to talk about it. I don't know if you watched the Joe Rogan show with Mark Anderson, who's one of the co-founders of, one of the most famous VC firms, Anderson Horowitz. So what they talk about is Mark Anderson has been, first of all, an amazing investor. He's found so many great companies and helped them grow. So he's helped the society as a whole. But he's been investing in crypto startups for a while now, since 2017 probably. One of the few who actually saw it, And he goes to the Joe Rogan show. That was maybe a year ago or 2 years ago. And he says, most of my crypto startup founders that we had in our investment portfolio, most of them got debanked. So what is debanking? Is that basically, if they can't say crypto is illegal, for example, or they don't want to, get to the point where, they have a proper regulation or a law, what they do instead is they go to the banks and they tell them, hey, don't let any crypto company have a bank account with you. And then you're completely out of the system. What can you do? Because you need a bank, at least in the current system, right? And so the same way they went to payment processor, they went to advertisement platforms, and they told literally everyone, all the big companies, do not let anything that is related to crypto, pass through. That's an effective way to cancel without having to regulate. But I think it's illegal, right? But that's what they did. And that's what we went through. So as a company, we launched in 2022, a little bit before the Luna crash. And by the way, when the Luna crash happened, our demand surged. You might wonder why. It's because actually some people did realize that FTX, Coinbase, etc., they're centralized wholesalers. They're not using the blockchain technology. They're not using the crypto technology. And so they stained the industry while actually just they're just like they operate like a bank almost, right? Or a broker, but they are clearly a centralized entity. So it's completely unfair. So some people saw that and they were learning about DeFi and they wanted to get, on hardware wallet, their cryptos and own their funds, etc. So that's good. But once we wanted to grow, we needed, of course, a bank account. We needed to charge our customers. You know what they did? So the Stripe blocked around $30,000 of our initial, sales, and they refunded our initial customers without even asking them anything. And customers would send them emails copying us, hey, we want this charge to go through. We're happy with the service. And they wouldn't allow it. And they told us we're refunding them, but actually they kept the money and didn't refund them. It's complete. Yeah. So that happened. Advertisement platforms like Facebook, YouTube, Google, etc., they would ban our advertisements right away, even though they're completely compliant and it's purely framed as education. Education is not allowed. You realize education is not allowed. So we've been through a lot when it comes to that. At some point, it became a game where we're counting how many banks shut us down. And actually, it led to a great company culture and a spirit. Because what they don't realize is that by doing that, they actually built up our resilience as founders, as pioneers, as people who want to make this, who want to make a change. And that, fast forward to today, of course, we have 4,000 members, 130 employees. It's massive, right? So that was in the very get-go, in the beginning. And so that's fighting spirit is something that became our culture that has been passed on to all our employees, but also to our member base. And so that's why all our community, we have a almost 70% retention rate, is because they tell us, first of all, in terms of education, it's insanely good what you guys do. But more than that, it's not just a community, it's a movement. I've learned so many things that I wouldn't be able to learn on the traditional media or what people are saying outside. I was able to learn this inside thanks to you guys. So they created a monster.
Very good. And I think, unfortunately, a lot of people don't realize as well, and they're seeing it in the UK. Once you put your money into the bank, they can kind of go, no, we're keeping this. I mean, they've done it in Cyprus, they've done it in Greece as well, where you couldn't get all the money. But the thing is, the amount that's insured, if it does fail, it's like, I think the max I've ever seen was like 100,000, and it's usually about 50,000. But if it does fail, which has happened, I don't think you'd ever see anything. You're told you can get it, but I mean, my experience with anything with insurance and anything like that, they don't pay out. They look for every way to not pay out. So I suppose maybe touch on that as well, kind of protecting your money.
Well, I at this point, I have very little that I don't control myself of funds and capital. Not that I'm a conspiracy theorist. It's just that I'm just first of all, I know how to do it. And it makes me sleep better at night that it's in my control other than someone else's control. And the second thing is, for example, FDIC insurance, right? It's like 250K. Well, two things. Number one, it's only 250K. If you had like 1 million, 2 million, whatever, right? You're in legacy. Well, it's not insured. Then, secondly, even if you tell me, yes, but you can create multiple accounts, blah, blah, blah. Okay. Well, first of all, it's denominated in the US currency, right? Or in fiat currency, whichever it is. Well, fiat currencies, by definition, because the supply keeps going up, they print it. Well, the value keeps going down, right? The purchasing power keeps going down. So that's one thing. Second thing is, if you were to go and ask for that insurance to kick in and your bank actually got wiped out, I believe it could be a systemic issue, and then the government could decide whether or not they want to pay you. But if you were in this situation, it's probably that a lot more people are in this situation. There might have been a bank run, for example. So do you really think that they're going to pay everyone that exact amount of money on time? Well, they're not even capable of getting you, let's say, even $100,000. If you walk into your bank branch today and you go and say to the counter, oh, I want $100,000 of my money that is in my checking account right now, do you think they're going to give it to you? No. So what makes you think that this insurance they will give to you? Absolutely not. Or maybe after 5 years when you're...
I'll tell you a situation that happened to me. There was a main stockbroker in Ireland on the main street, wanted to trading for, generations. And it was Irish money, which is similar to kind of sterling. It'd be more than the euro. I think it was about 20,000 I had invested. It was in EMC. I had a friend working there was telling me what was going on. It was going up and then it kind of tanked. But I was like, okay, I get out before. So I would have got my money and it was blocked. And one of the sons had been trading illegally. And when the markets tanked, everything went tumbling down. I was supposed to have insurance of about £20,000 Irish pounds, which I would have been happy with that. And the judgment ruled it was Coopers was actually in charge of it, that they get paid first. And I got something like 2.5 grand. And there wasn't that many cases. I don't know what it was. It was like, how are they spending so much for this? So, so even though you were told you were guaranteed a certain amount, it meant nothing. And I think the same with this, even if there is some money that's set aside, they go, oh, we have to pay the liquidators to do this, and you might get pennies on the dollar.
Exactly. So I mean, I don't see who would, I mean, honestly, I think, the public awareness has risen overall quite a bit. And so if tomorrow you were to ask almost anyone, would you rather custody your own funds? I think most people would say yes, but I don't know how to do it. That's the issue. How to do it safely, how to do it properly, right? And that's where the education part comes into play, because setting this thing up, a hardware wallet, is just about getting educated and doing it, because it's very difficult for the human nature to do what we call risk management. So basically to prepare for an eventual future outcome that would be negative. It's very difficult. And so usually people are reactive, okay, instead of proactive. But in that case, it's very important to take some time. Literally takes maybe a few hours, to really do it well, get educated, etc. But at least it's a good safety net that you have under your control and no one else's. I would rather lose it all and put it on myself and think it's my fault than lose it all because of some government, some banks, some institutions, some financial advisor, whoever that is, and then I have only myself to blame for because I picked to trust someone that I shouldn't have. That's way worse, in my opinion.
No.
I'd rather trust myself. Right?
Absolutely, absolutely. And I mean, you mentioned Coinbase and Binance and all these different ones. The same thing. It's like when you use your card or transfer money, they're like, "Oh, no problem, give us." But then when you're trying to take it out, they just put roadblocks up to you, and they block accounts, they stop accounts, and people don't realize that. And the same was with these kind of crypto ATMs. I know they charge now about in Poland. I don't know what it is internationally. Does it kind of trend similar? But it's like 3.5%. So if you're getting cash out, but I've heard that it goes up. There was a stage it was at 8%, and people then were thinking they were beating the system. And I'm like, what? They're getting that amount of money just for you to take out cash, and it's everything is kind of like just taken out of your pocket.
Yes, I mean, for the crypto ATMs, I think it's because they have so much extra fees to pay. I have a friend who is in that business. They just provide the immediate convenience. So that I think that's a different story. I mean, if you want to buy crypto, there's better ways. If it's urgent and you really need to do it now, I mean, maybe. But I've never used one. But yeah, I mean, let's take Coinbase, for example. At the end of the day, Coinbase doesn't make money when you make money. All right, that's very, like, people always forget that. So when Coinbase lists an asset or whatever, Coinbase doesn't make money whether you make money, you don't make money, they don't care. The only thing that matters to them is that you increase the trade volume, so you buy and sell and buy and sell and buy and sell. The more frequency that you can, the more volume that you can. And to have volume, you need to have big deposits. If you go on Coinbase financial statements, this year in 2025, 2026, they will most likely, based on projections that we made at Decentralized Masters, they will most likely make around $1 billion just by profiting from customer deposits that just sit there and rot. I mean, they don't rot because Coinbase uses that money to then make extra yield. Just like, I mean, doesn't that remind you of one industry? Banking. Banking does the absolute same thing. When you have some money in a checking or savings account, you are effectively lending your money to the bank so that they can use it to make more. And they give you not even 5% of what they make out of your money.
Usually it's not even 1%. And then there's dirt tax on that, which is like, I don't know, is that in all countries, but in Ireland and most countries, it's like 40% tax or something like that on that 1%.
So centralized exchanges copy the exact same business model. Kraken, Coinbase, they do the same thing, but it's a very smart model, right? So same thing, what they do on top is when a project wants to list on these exchanges, they charge them atrocious fees, and they require that much volume and that much market cap and that much size. But by then, the lion's share of the profit is gone already. It's much better to be in the what we call the native markets, which are the decentralized exchanges. I mean, you get projects in their infancy. Of course, you have to do a lot of research and understand what you're doing, but at least the opportunity is still there. How many times have you seen an asset list on Coinbase or Kraken and just go down right away? Because it's exit liquidity. Always. Almost always now. Look at Kaspa, look at Tau. I mean, all of them. They just drop 50%. Boom. And the reason is the early investors are waiting for that listing to exit. It's just math, right? You have I believe 10 million users in the native markets and decentralized exchanges, and over 250 million on centralized exchanges. So naturally, when these 10 million want to take profit, it's when the listing happens. And then Coinbase makes a lot of money because that's when mass trading happens. Buy, sells, and it's changing hands, right? And that's when they get cuts of every move. They don't care if it's going up or down. They don't care, right? So people usually don't understand that. When you understand, and what is all the entities or the stakeholders involved, once you understand their individual interests, you can usually predict better where the price movement is going to go, because you understand the forces at play.
And what about kind of the transparency of the founders and stuff like that, and track record? Because a lot of the times when they're doing rug polls and just trickery, it's kind of normally it's very hard to find the information about them. But I've heard also that sometimes that's planned. They make a few little kind of wins and then they wait for the big one to pull it out. Right? But when you can actually see the track record and the person's, not just LinkedIn, but the full details, the team behind it. Obviously, that's kind of a safer mechanism than just kind of, sometimes they just throw a dart at the wall and they go, I think this one looks good, or go by the name.
See, that's the beauty. I mean, the pros and the cons of the free market. You will have doxed, so people who show their face, and they will do amazing good things. It's a quadrant, right? So you have those who show their face and do amazing good things. You have those who don't show their face and yet do amazing good things. Satoshi, right? And then you have those who show their face and are literal scammers, and they don't care. They still show their face. Ridiculous. And then you have those who don't show their face, and of course they scam, right? Now, in this quadrant, you want to think about probability. Well, the probability is that if they show their face, it's more probable that a project that is successful, it's more probable that they will show their face. So, it's your guiding principle. It doesn't mean that you don't have some of each quadrant, but you want to look at where is the highest probability. Now, I'll give you another example. We are completely doxed, right? We're a financial institution. Of course, we don't take any, we don't do any trading. We don't sponsor any crypto. We're completely neutral, right? We just charge tuition based on support and knowledge level of our members and what they need. But it's purely education, right? No financial advice, nothing like that. And yet, you can find all sorts of things, and we're completely doxed. Every single one of our employees, our mentors, myself, my team, my research, everything is completely public, right? Not a lot of people do that. Our recent successes have been public. Our members are extremely public also, with the reviews and what they say about us online, and how grateful they are to be surrounded by an expert team. And yet you will find some bullshit on the internet saying, oh, it's a scam, it's sketchy.
I'll tell you on that one, because I always check reviews, and I know by looking, you've got very high trust by. I know by reading the reviews that it's not ye, it's them, just by going through it in detail. And the one thing that I liked is you responded with really incredible information, that you knew exactly what they were coming from. They were either just probably somebody just trying to knock you, pretending that they dealt with you, or the information that you shared. And a lot of the times with companies, they don't even respond. They just kind of let it go and they just do their thing. So for me, when I see that, when you see 4.9, that's rare, to be honest, to see 4.9, 4.8, that kind of thing. But when you see a response to each of the negative, and it makes sense, your response, then I kind of have more trust in you.
I'll tell that to my team then. Very proud of them.
Mhm.
But basically, what we understand is that our career is going to be very long. We, as you said initially, we have a 25-year plan. That's not a joke. We literally have that. It's actually plastered on our wall here. Like, we have a deep vision of what we want to accomplish, right? And we have like 10 principles. The number one principle that we always live and abide by inside our company, and our 130 employees abide by the same principles. The number one is customer obsession. And we always say, as long as our customers are happy, everything will be all right. Everything will be all right. Because they can throw dirt, they can try and cancel us like it happened initially in our early days. Now we just feel like we have this cockroach mindset, because cockroach is very hard to eliminate them. So as long as our customers, they're happy, it's okay. Like, nothing can happen, because that's that's the most important thing. And truth will always, be there, because your members, we have a lot of them now. They actually become our ambassadors, and they defend us more than we could ever try, even, because it's very difficult to talk about yourself and like praise yourself. I'm talking about the services, right? Not me as a person. But when your customers, your members are so vocal about it, I mean, what else do you have to do? Just focus on having an amazing product and delivery and service, and it will be fine. Then we hold our team members, our employees, to very high standards, and our reputation is it's paramount. It's very important. So yeah, we have nothing to hide. If there's a negative review, if it's not a customer, we're going to say, hey, you're not a customer, you don't know. And that's usually the case, right? Sometimes a competitor, maybe. That's fine. We think that the more people come in the space, the better. Okay, we're happy to share the pie. There's no issue. However, when it is indeed a customer, it can happen, right? There is no 100% satisfaction for any big business in the world. It doesn't exist. Sometimes things can slip. The main important thing is, how do we make it right? How do we improve on it? How do we make our services better? How do we learn from this? And so we have to respond to get the feedback. And that's how our company operates. Like, one mistake is allowed. Everyone can make mistakes. Not two, because otherwise it means we didn't learn from it.
And because in my Awakening podcast, we kind of touch a lot on AI and just different companies. A lot of companies are kind of changing over to that you're dealing with the AI agent and you think you're dealing with a human, but there's some of them, they've learned the mistake, they've gone back. So I love knowing that, you're not going down that route, because it's actually frightening as well. I don't know what your thoughts on that, with the amount of jobs that are actually being lost because of AI. And I've come across people, they were told to train the AI agent and then said, good luck. And because they were kind of living month to month, they had no choice. And that's a horrible situation. So when I see that you're actually, a customer, human to human, that's something that's kind of rare. No,
we literally went the opposite route in our strategic discussions with the company. We said, we will actually push human, not AI. However, we're training our people. Every single one of our employees uses AI. But all the customer interactions, all the interactions are human. Every text message, every email, every education course or learning, everything is human. We do, I don't know, more than 50 plus live sessions a week. It's a lot, right? Everything is human. Every single thing, every interaction, all the mentorship, everything's human. Now, we use AI, though, for our algorithmic screening process in the native markets to generate investment opportunities and ideas and cross-check. But the rule is, and the golden rule is, we always, even with our bots, we always have human checks and last review every single time. Nothing can be published and pushed live from AI, never. It's not allowed. It can be created by, I don't know if you know the rule of 10-80-10. So you do the first 10% of ideation and thinking, then the next 80% can be taken forward by someone else because they understand what you have to do. And you come back for the last 10% to review, give the feedback, and then push live when it's really good. Okay, so that's the 10-80-10. We've been using this rule for all our managers on how to lead. whenever there's a project or a research or something. But we started applying the same rule with AI as well. Like in your ideation, you have to come up with everything you want, then AI can do the job, and then the last 10% you have to fact check, put your own thinking, and that's what makes it really great. So we apply that rule, basically.
And because, I played with a few different AIs, and a lot of the time it lies. And then you're going in and then giving the information. Like one recently was about, because my business partners helping people in refugee camps in Uganda. And then we learned that there's like 1.9 million just in Uganda. And when I done a search on about 3 or 4 of them, Grok, U.com, ChatGPT, it all gave me the exact same numbers. But then I said, yeah, but there's 1.9 in Uganda. That can't be 6.6 million. And then it goes to 1.23 million. And same with something else. I see it pushing an agenda. One of the guys that I get on my show, he talks about kind of common law, sovereignty and things like that. He's built one that currently it's just for parking and parking fines because there's a lot of corruption in that field as well. But he's put it that the information is just from books like Black Laws Dictionary, Boulevars and different things that are relevant. It's not going out to the web, finding it. Is that something that you're able to do, or you look at as well? That is because unfortunately it can grab stuff. I know, thankfully you're overseeing it and just not blasting it out. But is there kind of, I suppose, textbooks? I mean, when you were talking about the studying that you did doing different thing, is there anything that you can do similar to that?
So in our team, how it works is that, okay, here's what we've discovered. All right, it's that when a single human is involved in a deep research project and then uses AI to do it, usually what ends up happening is you start the project, it's very clear on what you have to do, etc., and you start with AI, right? And then as you keep prompting and requesting updates and updates and updates and updates with your AI, the issue is at the end, when you're done, it doesn't resemble what you initially wanted at all, but you lost track because you got into the details too much, and so you lack the broader vision of what did I try to achieve initially, okay? And that's why a second eye is always requested, bare minimum. We always have at least 2, usually 3 people doing research and working on a project. I'll actually use an image, an analogy that I used with my team, and it kind of unlocked them quite a bit. So let me tell you the story. So basically, I told them today we're at a phase where every single company out there is trying to do what the CEO of a candy company did once. All right, what candy company? So, by the way, I made this up completely. I read this somewhere, okay? But I just used it for what I'm seeing with AI, for them to understand better. So basically, I read somewhere there's a CEO that came to a very famous candy company. It's the #1 candy company in the world. They have something about the taste that is incredible. All the kids literally grow up eating this candy. It's the best, okay? And when this new CEO comes up, he's not the legacy founder of the company, and he's been brought on to increase the profits, okay? So what does he decide to do? He thinks, look, in terms of revenue, we're really good. Our brand is strong. So what I can do is I can try and create more efficiency, and I'm going to cut expenses. So how am I going to do this? Well, he looks into the candy formula and there's like 47 ingredients, okay? And he thinks, he gathers his team and he says, are the 47 ingredients really necessary to make this candy? So they go on trials and they decide to cut 1 ingredient. They come to test the candy and wow, it's the exact same. It tastes exactly the same. So he's like, beautiful. And here you go. He increased the profit margin by 1% just by removing this 1 ingredient. Okay? But he doesn't stop there. Now he wants to understand what is the second best ingredient to cut. The taste of candy, it still tastes the same. Another % extra in profit margin. And he keeps going. Until after 2 or 3 years, they're down to 27 ingredients, let's say. Okay? So far, so good. But what happens is, very slowly, their revenue starts slipping a little bit. And instead of being the number one, now they're number two. And the CEO doesn't understand, because when he's tasting the candy, he's tasting exactly the same. Okay. But you know what massive mistake he made? Is that when he's testing how to cut from 24 ingredients to 23, when he's tasting that candy, he's comparing it.
From the one before instead of from the 47.
Exactly. And that's how he drowned a very successful company. And then he suddenly, decides to pivot around and go back to the 47 ingredients, sales go back up. But the lesson and the moral in the story is what? Is that when you're doing a project, and a long project, research project, whatever that is, and you're doing it with AI, what you are you have to keep your, I like to do the first 10% myself and know exactly what I want to do instead of going into AI's hallucination and its suggestions, because you can go so far off of what is actually needed. So that's why I do the first 10%. Then the 80% you can use AI with proper prompts and always referring back to the first 10%. And then the last 10% is usually better to give it to someone else, usually your manager, usually someone with a lot of experience, etc., that can help you put you back on track. And hey, we lost this thing here, etc. And then usually you control it well. And it does better than if you just did it yourself manually, of course. So I hope you like the analogy.
No, brilliant. I love it. So you mentioned, I know it's 25 years that you said your vision is for 25 years. And did you have it on your, so what's the long-term plan of the company?
All right. So when we started, you might it's kind of unheard of. Why would you do education? There's so much to do in this space. Why would you do education? Well, actually, with my co-founder, when we initially sat, we had a vision for building a fund, right? Investing in the project, and that's my background. But we realized, hey, it's not about what I can do or what I want to do. It's more about what the market needs. And we saw so many crypto startups, in 2021, etc., just launching tokens and this and that and all that speculation. But nothing stuck, except for maybe Bitcoin and Ethereum. Nothing really stuck. So it didn't make any sense. So then we thought, what does the market actually need? And the market, what it needed was literally just to understand what the heck is happening. And so we decided to start with education. Good for us, it worked, right? We became, sizable, I would say. And we're number one in the world, I would say, in crypto and DeFi education by size, at least in revenue. And so it's premium service, right? There's a lot of small ticket, memberships, etc., but it's way more extensive what we do. There's mentorship, experts, etc. So anyway, education was the first step, but it has never been the last step. It's the first step. Why? Because when you educate people and you give them a lot of valuable information that can literally change their lives, they owe you. It's called the principle of reciprocity, because they never forget who taught them how to fish. If you cook someone a fish and you give them once, but if you teach them how to do it and they feed themselves for the rest of their days, they will always remember, right? So that's amazing because it creates a lot of trust and loyalty. I can confidently say that even if we didn't market ourselves and didn't try to onboard anyone else, we would be a very profitable company because our members just stay and keep renewing, which is what you want. Almost 70% retention rate. I mean, go ask any businessman out there, it's probably their dream. And the reason is mainly because education, good education, amazing service, what we focus on, right? Not just revenue targets and all these things, because that comes with time. So once that is built, it's the most important foundation, and that's why I'm talking about it extensively. Most people, it seems trivial, but most people don't do it right. Answer the reviews, even the negative ones. Post your wins, post your losses, be transparent. Invest in the product, invest in your customers, talk to them. I've done hundreds of customer calls myself, just hey, how are you doing? What do you want to tell me? How's the service? What can we do better? Just keep doing that. Our head of education has done thousands of them. He's head of education. So it's not like they usually send like the lowest level employees to do it. We send our highest level. Once you gather the feedback, obviously you improve. There's no other way. Once that is done, and we keep, of course, doing it, now the next step is they tell us what they need. And so what they need right now is a solution to navigate the complexities of DeFi without the complexities of DeFi, basically. So we're right now building a software that removes bridging, gas fees, wallet addresses, all the stuff that you don't want to see that should just be in the background, right? So that's what we're working on. So that's the next step. So we would go from kind of do-it-yourself model where we teach them. Of course, there's mentorship, etc. But in the grand scheme of things, they're investing for themselves. Every single one of our members, right? We don't touch their money, never. We would go to a model where we, it's not really done with you, but it's more like we're providing you the tools and everything to make your life simple. Like, it's not just teaching you, it's also showing you a way to do it better, like actual tools, okay? And the final step will be the fund. People are literally, I think I receive at least 2-3 emails from our members every day saying, hey, you've helped us do really well in the markets. Now, thanks to you, we have our eyes wide open. We understand this. We want to be in this for long term. But you're still a better investor than me. So would you please take my check? So that will come. That's the end goal.
That's probably highly regulated as well, and you have to jump through the hoops with that, yeah.
Exactly. So we're in the process of doing it. We had to build up our track record, our credentials, which is, there, and it's really good. So now, okay, when you have people, what I didn't want to do is maybe launch a fund 3 years ago, and then whenever there was a market drop, everyone takes their money out and put them back. I don't want that, okay? If you want to trust me, I need you to first understand what it is, the volatility, our strategy, how we do it, and then once you're at peace with it and you understand that there will be volatility, etc., because it's an adoption, right, that is happening of a new technology that evolves fast. Once you really have trust, and once I've told you no 50 times, on the 51st time, I'll take your money to invest it for you. But now you're going to keep it because you're going to trust me because I told you no 50 times, right? Which usually people don't do. So that's where we're going to tend towards.
Excellent. So I suppose just finally, you can tell what's the kind of onboarding process, what people need to do and where they'll find you.
So our website is decen-masters.com, DECEN-masters.com. Our company is Decentralized Masters, and we help serious investors, and there is a qualification, right? We don't let anyone in. We're a bit like the Harvard of crypto, so of digital assets, by the way, because we're beyond just crypto. We do traditional tokenized stock, tokenized gold, tokenized real estate. We teach on everything, right? Everything digital. So we help serious investors who want to take control of their financial future more in their own hands, right? So if you're tired of trusting banks or trusting your financial advisor, who usually sucks, and Wall Street with your wealth, and you want to learn institutional grade strategies in the digital asset space because you believe it's going to go up, but you don't know how to do it, then you can apply to work with our team at Decentralized Masters. We provide world-class research. We have an amazing track record, especially in the native markets that I was mentioning. We have, as of the data for the last 26 months, this is public data. It's very transparent. We have an 86% win rate on 515 recommendations. So 86% of the time, it went up. 50% of the time. So out of 515, 48% exactly of the time, it went up by more than 100%. So almost 1 out of 2 doubled in value. It's wild, right? So that took 26 months to build a track record like this. So we provide world-class research, as I'm saying. Again, we don't manage anyone's money. It's support levels, one-on-one support. It really depends on your knowledge base and what you're looking for. And we teach people our proprietary ABN system that we created. It's our own investment framework in the digital assets, heavily inspired by the CFA program, heavily inspired by my traditional finance experience, heavily inspired by hundreds of hours of study in the traditional markets that we brought to digital asset space. So right now, the community is about to cross 4,000 affluent investors, right? There's, as I said, qualification criterias, and we're just having the time of our life, building financial freedom together. And yeah, then the software, the fund, all these things will come as well. So on our website, you can apply, decentmasters.com, apply now. And if you want more information, everything's on the website. We have a YouTube channel with a lot of customer wins, videos that explain what we do. And then you can read probably hundreds of articles about us as well online. So if you type my name or Decentralized Masters name on Google, you'll find a lot.
And I'll make sure I'll put the links about the audio and video. But I think I'll also include the interview with yourself and the co-founder, because I think it was a lovely way of getting to learn who you are and what you're about. And I'll put that in the show notes as well. So thank you very much, Tan.
Thanks a lot, Roy, for hosting me, and keep doing what you're doing.
Yeah, no problem. Thank you very much. So
All right.
that's all for
Bye-bye.
the Crypto Podcast. You'll find all our episodes on thecryptopodcast.org. You scan the QR code, you'll find my 6 podcasts. Or go to roycon.com. If you're looking for virtual assistants, go to FIAT.world. And I have 2 school programs on podcasting and Brain Gym. You'll find the links in the podcast description. Until next week, take care.